how one investor changed his life by thinking differently about money. When he was just 10 years old, this boy didn't play video games or waste time like most kids. Instead, he used to visit a horse racing track in Omaha, not to gamble, but to observe human behavior. After the races were over, people would leave behind thousands of betting tickets on the ground. Most believed those tickets were worthless. But this boy thought differently. He believed that some winning tickets must have been thrown away simply because people were drunk, careless, or just there for fun. So he patiently collected every single ticket, checked them one by one, and yes, many of them turned out to be winning tickets. Since a 10-year-old couldn't legally cash them, he handed them to his aunt, who collected the money for him. That boy was Warren Buffett, and what he learned that day wasn't about luck. It was about patience, discipline, and the probability, the habit that made him rich. As he grew older, one habit never left him: reading. When he was in his 20s, Buffett started his investing career with the Buffett Partnership. While others chased market tips, he spent his days buried in a book called Moody's Manual. Before websites, before stock screeners, before apps, this book listed company financials in tiny print. One page contained data for 5 or 6 companies. Buffett read it page by page, every single day. Even today, he spends 5 to 6 hours a day reading, because he believes the biggest compounding in the world is not money, it's knowledge. Rule number 1, learn more, read more. The first rule of investing is simple. The more you learn, the more you earn. People understand money compounding, but they underestimate knowledge compounding. Read, and then read some more. Rule number 2, know what you own. Peter Lynch once shared a powerful story. A group of 7th grade students created a stock portfolio that returned 70% in 2 years, while the S&P 500 returned just 26%. They beat the market. How? They followed one rule: never invest in a business you can't explain in one sentence. If they couldn't explain what the company does, they didn't invest. Simple thinking, powerful results. Rule number 3, small companies, big opportunities. Large investors often can't invest heavily in small companies. Why? Because even if a small company grows 10 times, it won't move the needle for them. But for small investors like us, this creates opportunity. The bottom of the market gets ignored, and that's where life-changing returns are born. Rule number 4, fewer stocks, deeper understanding. The human mind can only track 8 to 15 companies properly. That's why Buffett says, if you find 3 wonderful businesses, that's more than enough to do very well in life. Don't collect stocks like trading cards. Own businesses like a partner. Rule number 5, if you love the product, study the stock. Peter Lynch noticed his daughter stopped shopping at GAP and started buying from the body shop. Instead of ignoring it, he researched the company. Packed stores, profitable expansion, strong fundamentals. The stock multiplied many times. In India, we've seen the same story. Royal Enfield, Britannia Industries, great products, loyal customers, explosive long-term returns. Rule number 6, don't try to time the market. 99% of people lose money trying to predict when to buy, when to sell. The best investors don't time markets. They buy great businesses and let time do the heavy lifting. Rule number 7, free cash flow. Is king profit can be manipulated. Cash cannot. Free cash flow tells the real story. Can the business survive? Can it grow without borrowing endlessly? Always look beyond earnings. The stock market doesn't reward intelligence. It rewards discipline, patience, and clarity. If businesses grow, stock prices follow. Focus on business quality, not market noise. That's how ordinary people build extraordinary wealth. If you believe books can change mindsets and knowledge can change lives, then start investing in your learning today. Subscribe to this channel for more real investing stories. Hit the like button if this changed your perspective, and comment below what topic you want next, because the next success story could be yours